Hey y'all, Lisa Davis here, the trusted banker. Welcome to Black and Bankable. And I wanted to come to you with this additional news today, Monday, March 10th, 2025. Let's talk about these Republicans because they don't have a problem charging American people and they don't have a problem making sure that the American people are paying more money that they need to pay until it's time to campaign, and then they make us all these promises. Now, as you know, I am the trusted banker, but I am a former regulatory compliance officer. And so I do follow the regulations and the processes that they go through when they get amended through the House and through the Senate, just to see what's going on when it pertains to money, banking, financial industries, crypto, and all those good things. So that's going to be my take here on this channel because I want the American people to know what's going on. Whether you like it or don't, at least you know what's going on. I guess I'll move my money. Credit unions are in this too, Anna. Credit unions are in this too. We got the Credit Union Association backing this as well. So first, let's just look at a little bit of stuff, right? Well, we can look at this. So let's just look at this right here. So this is where it went to the House Financial Committee. Let's go to the front, right? To the House committees on financial services. So a lot of times people say, you know, give me what is your source? What is your source? My source will always be the United States government. My source will always be this administration that's in office, like it or love it, right? So March 5th, this happened. This is when they had their committee meeting. And this committee meeting was to overturn a rule that the CFPB put in place about overdraft fees. And I guess this is near and dear to my heart because was I in my 20s or 30s? I remember a long time ago, like five lifetimes ago, when I went to a conference, and it was something about apply here or push this or do that and get for this professional leadership training on how to sales thing. All I know is that I signed up for something I wasn't aware of, and like in 2 weeks, I had 10 overdraft fees costing me $350, and this had to be a good 20 years ago, right? It was like $300 something dollars. And it was one over the other, over the other, over the other. It was a domino effect. And so when it comes to overdraft fees, I don't know if these people that are in position in the House and in the Senate understand how this can impact people, especially low income people, people on fixed income. It can literally wash away your entire account, especially if you're on fixed income, you got direct deposit, right? And back in the day, that was probably the early 2000s, right? At least then they removed all of those overdraft fees. It seems like today, if you have an overdraft fee, and I'm not in the process. I mean, I'm not in the practice of getting them too often anymore. But people learn in their 20s. People learn in their 30s. You learn through sometimes money that you have to pay out if you're not managing your bank account the right way or your debit card the right way. So yeah, you learn from those mistakes. It's not like something I'm going to do all the time. But I never forgot that lesson I learned because it was expensive. And so now, back then they reversed all of them because I provided proof and I got with that company. They direct debited my account without letting me know they were going to charge me all this money, which set my account into a ricochet thing where everything that I was paying didn't get paid. I got charged. Everything bounced. It was a mess. It took a minute to clear it up. Thank God I worked at the bank, so I was able to clear it up. But back then they would reverse fees. Now I feel like banks tell you we can reverse a minimum of 1 or 2 a year. Depending on your bank, we can reverse a maximum of 5 a year. So even if you have a ricochet event that might happen, and it can happen, right? It can happen, especially for younger people that are just learning how to manage their money. They get direct deposit, maybe first job out of college or whatever. They think everything's going on. They forget they got recurrent fees. They forget they got these subscriptions. They forget these got the applications. Anything can happen to cause overdraft. And for these Republicans to be fighting the CFPB rule that says all overdraft fees should be capped at $5. For these Republicans to be fighting that, and some of them are in like the poorest states here, right? So for them to be fighting that banks should not be able to charge overdraft fees is crazy to me. Let me show you how much Americans spent in overdraft fees so that we can make it make sense, right? Because we're gonna make it make sense. Q4 data showed that revenue was down nearly 50% versus pandemic levels. Q4 data suggests over 5.5 billion, what's this for? NS fees and overdraft fees. Looking at the CFPB pulled data that showed Americans spent in 2023, the fourth quarter of 2022, approximately 1.5 billion in overdraft fees, and suggested an annual reduction. Let me find the other article. I'm on the wrong page. Hold on one second. I want to give you a simple. Right here. Sorry about that. I always have everything pulled up. Trust me, I do prepare. So this came out this year in March 2025. 7 in 10 Americans find overdraft fees unfair. This is a Pew report. Bank overdraft fees are back in the news, right? Fees can be between $24 to $35 a pop, okay? And I have another report that showed that Americans paid $5.5 billion in overdraft fees in 2023. So let me find that report. Because I don't want to say, trust me as my source. Oh, it was AI? 2023. 5.8 billion in overdraft and non-sufficient funds, according to the CFPB in 2023. Overdraft revenue now is down more. It's a consumers over 6 billion annually. So this is the premise of how much banks make on it. And this is why banks don't want to stop charging it. We have to understand that financial institutions, credit unions, any type of financial services, if they charge fees, they're all fee income driven. That's how they make their money. They don't always make money. They make some money on interest and finance charges and investments, but they make a ton of money on fees. So the Congress people that were saying that they don't want Americans to pay $5 for fee. We don't want to cap the overdraft fee at $5. We want banks to be able to charge what they want to charge, because a study from the Federal Reserve Bank said while fee caps succeed in reducing overdraft fees, they also trigger adjustments by banks that limit the financial inclusion of low-income households. Understand, when the banks have to minimize their fees, they have to adjust. Basically, they're saying they have to adjust their value offering. They have to adjust their product offering. They have to adjust how they're going to recoup the money that they lost if they have to reduce fees. 5.8 billion for 2023 is a lot of money for banks to figure out, okay, if we get rid of this fee, what are we going to do in order to charge people that bank with us additional money so we can recoup that fee plus continue to be profitable, right? So the American Bankers Association represents 52 state bankers associations, said if not invalidated, they said not to eliminate access to overdraft, harming consumers who have few, if any, other options for meeting short-term liquidity needs. They're using the argument that low-income people, because they don't have reserves, because they don't have a savings, because they might not have retirement funds or disposable income, they need to use overdraft as a way to make ends meet. So therefore, it would not be good for banks to only charge $5 for overdraft fee when they're providing a service to a lot of people that can't afford things. And when they go to the grocery store and they're trying to buy food for their family, if their debit card doesn't go through, or their credit card doesn't go through, they should not be charged. They should be able to get that and look at it as a short-term loan. And the fee for overdraft is basically a short-term loan fee. That's how they're rectifying it. Like that's the logic they're using, right? The rule would do so even though analysis show that the average transaction that overdraws customers' accounts is in the hundreds of dollars. So typically hundreds of dollars is a couple $100, right? Overdraft fees can be from $28 to $35. That's over 10%. That's just as much as payday lending, check cashing places. That is subprime lending. That is predatory lending. If your basis is to say that low income people, because rich people don't need overdraft. I love to always go back and state that people, wealthy people, rich people don't need the things that they're putting on the American people that are on fixed income or low income. Rich people don't overdraft draw their accounts. And if they do, they probably don't even notice it. Low income people, if one overdraft hits and another, it could be devastating for them. It should be capped at $5. It should not be allowed to be $28 to $35, right? The American Tax Reform said the CFPB's basis for proposing the rule lacks merit. No, it doesn't. No sound reasoning is given for why the CFPB chose to pursue this rule besides claiming to uphold consumer rights. The CFPB was created due to the mortgage meltdown of subprime lending in 2008, 2009, 2010, 2012, 11, and 12. Because there were no regulatory requirements, a lot of the new types of lending that was going on back in the day, they didn't have regulations against it. And so therefore, people were getting charged all kind of money, all kind of interest rate, high interest rate. And it typically would be people that were not fiscally savvy, people that were not financially capable, or people that were low income. And these are the people that were the victims of predatory lending. And here we go again, right? Here we go again. The CFPB cannot be allowed to formulate rules out of thin air. It's not out of thin air. It is studied. It's a ton of studies. It's a ton of surveys. The American people said they don't like overdraft fees. So it's not out of thin air. It just amazes me how these Republican congressmen, senators, members of the House have a straight face when saying these things. I just don't understand it. I don't think I ever will. Maybe because I've worked with the people too long. Like, I just don't understand how you don't understand this could be detrimental to a single mother, to a single father, to a small family, to a family, to a senior, right? The America's credit unions. Here you go about the credit unions. With this final rule on overdraft protection programs, the CFPB is effectively telling consumers that their financial needs don't matter. See, you have to understand how they premise this. They're premising it like we're doing them a service by allowing them to go in the hole a few dollars and cover that and then charge them a fee versus saying they don't have enough money in their account so they can't do the transaction. Okay, so they're saying that it's seriously harming consumers who struggle with financial security. Credit unions offer overdraft programs because their members need this option to make ends meet. Credit unions work with their members to overcome financial challenges, but this final rulemaking will make financial services either less available or more expensive. The way they flip it is if we can't make money, because we know people are going to be irresponsible. We know we have people that's going to overdraw their accounts. If we can't make money, almost $6 billion a year, on charging overdraft fees, then we're going to make other services either not available for low income people or very expensive for low income people, or for everyone, right? For everyone. And the thing is, they don't do it for everyone, but that's how they state it. They do it for their high risk customers. They make fees expensive for high risk customers. They make products not available for high risk customers. Who's high risk? Who's high risk? Low income people. People that's not bringing a lot of revenue to the bank, right? People that have fixed income, people that are making a certain amount, that don't make a certain amount a year and not utilizing, not making big deposits, those kind of things. I mean, it's just bank talk, but I know what they're talking about. As a result of the rule, credit unions will be put in an impossible situation. If credit unions can't charge huge overdraft fees, they're going to be put in an impossible situation. Some may no longer be able to offer an overdraft protection. News light bulb moment. If the people don't have the money in their account, don't let the transaction go through. Period. People will learn how to manage their money a lot better if their transactions are declined and not able to go through. We are now in real time where the computer updates. The banks know how much is in the bank. There's not this lapse of time where somebody's spending and it hasn't hit. With all the technology now, everything's kind of in real time. If the money is not there, decline the transaction. Period. That'll help people learn how to budget better. If they don't have the money, they can't spend the money. You're allowing people to think that they have a surplus of money that they don't have, and now they have to pay the bank back. In the last year, I ran into so many people that have overdrawn their accounts to such a large extent that they can't afford to pay the bank back, and then they charge off those accounts, and now they're not bankable. It's just not a good practice. So as a result of the rule, credit unions will be put in an impossible position. Some may no longer be able to offer an overdraft protection because they lack the resources required to undertake the immense operational burden imposed by the rule, or cannot afford to run their program at a loss. This will only hurt and further disadvantage consumers and further disadvantage consumers. The Consumer Bankers Association. This rule is a blatant overreach, one the Bureau never had the authority to impose in the first place. Yes, it did. It amazes me how they just lie. They just lie. They mince their words and they lie and they gaslight us. That's what it is. Because this is just not true. The CFPB was specifically created to protect consumers from subprime lending and high interest rates and high fees. I don't understand why they lie like this. I really just don't. And so the Consumer Banker Association goes on to say millions of hardworking Americans, including the 1 in 5 without access to credit, rely on overdraft services as a valuable financial lifeline. I've been in banking 25 years. Back in the day, if you didn't have the money in your account, the transaction was declined. Okay, you're going to be embarrassed at the restaurant. Okay, you're going to be embarrassed at the grocery store. Okay, you're going to be embarrassed at wherever you're at. But at least if you don't have the money, you can't spend money you don't have, versus them giving a surplus of overdraft, probably up to $500 that they cover, $300 to $500. But the cost of them covering that is expensive. Not to mention that when you're going to get a loan, it's just bad all the way around for people that don't understand how financing works. If you go to buy a house and we see you have overdraft protection, not that you have NSFs, but that you have overdraft protection, that you're paying for overdraft protection, or there's an overdraft protection product associated or connected to your checking or savings account that we're using to qualify you for a home mortgage. If we track everything back and see that you have overdraft protection, you get automatically denied for a mortgage. They don't tell them that. We see overdraft protection as high risk. We see and it's in the guidelines, it's in agency guidelines, that if you have overdraft protection, not if you go overdrawn, but just if you have the service. I had loans get denied because they had the service. I don't remember if they accessed it, but I do know they had that service, and that was an automatic denial. They don't tell the people that, but they don't know that either. They don't know that. These Republicans don't know that. So not only are you putting people in debt with subprime lending, subprime overdraft fees, because low-income people, typically the overdraft account only goes up to $250, $300, maybe $500. So it's enough, but it's a small amount. You're charging $28 to $35. Literally, you're between 8 to 10% of the cost, plus the monthly fee a lot of people pay for overdraft protection, unless it's associated with the savings or a credit card that they gave you, right? All these fees, all these requirements, all these fees, all these things that may happen. And then on top of that, you're not eligible to buy a house, and you don't typically find out until you get to the lender and they see that you have that after underwriting and a severe deep dive into everything you got going on. So for military families who often face unique financial challenges due to deployments, relocations, and inconsistent pay schedule, overdraft protection can serve as an essential financial tool. Here's the thing. Why don't we let them have a credit card? Why don't you start approving credit cards for people so that if they do have an emergency, if they do have deployments, especially for veterans and military families, why don't they have a credit card that they can get their hands onto for emergencies instead of giving them overdraft, right? The Independent Community Bankers of America says, ultimately, the CFPB's rule would force many community banks to stop offering overdraft services. Great. I'd rather see that as a former lender and banker than to see you continue to offer it and charge $25 to $35 to $38 based on an overdraft, resulting in significantly more bounced checks and declined debit card transactions. Everything is in real time now. We have the capability to see transactions real time. So that means if there's no funds available, don't allow fund transactions to go through, period. The rule may not reduce access to services, but could create a chilling effect on financial inclusion efforts and force unbanked and underbanked consumers to predatory options. This is a predatory option. This is the argument that they gave at the House Finance Senate, at the House Committee on Financial Services. So this happened. This was the hearing on March 5th. It passed. Let's just start there. The Republicans won and it passed, right? So it passed. They're not going to put a cap on over. So it's got to go to the Senate, of course. But this amendment, this change passed and it went through. National Taxpayer Union say the CFPB chose to ignore the industry's efforts to help Americans in need, including the majority of NSF fees paid by Americans, and instead forced this harmful rule on the industry that would hurt the very community it is meant to help. That is just not true. This rule will force all banks to offer overdraft products at government-imposed prices, hindering innovation, limiting competition, and hampering the industry's availability to provide these essential products in the future. Nobody needs to. Okay, y'all know my position. And then the U.S. Chamber of Commerce, Mississippi Economic Council said, if large financial institutions start charging no more than $5 per overdraft, the reduced fee income may cause them to end consumer-friendly features that are currently able to offer as part of their discretionary overdraft protection programs, such as grace periods, waiving overdraft fees for transactions below a certain amount, or limiting the number of overdraft fees a consumer may incur per day. Understand something. The Chases, the Wells Fargos, the U.S. banks, the Bank of America, the Citibanks, okay, those banks are not working very nicely with low-income people anyways. So if your argument is this is to protect low-income people, most low-income people, if they are banked at the large banks, they're already paying monthly fees that are exorbitant that they don't need to be paying. But on top of that, these banks don't really have products for them anyways. Low-income people should really be banking at community banks, because big banks, trillion-dollar banks are not servicing them. They're servicing others. They're really just servicing others. So it doesn't matter if they won't have any other. It says they won't have part of their discretionary overdraft program, such as grace periods. I don't know what that means, but they have to have grace periods on their credit cards. There's not a grace period on overdraft if you're overdrawing their account as soon as the transaction takes place, and then expecting them, and having that product on there to capture the cost and then charging them the fee. I don't see where the grace period is. Oh, grace period, maybe they're talking about a grace period that they offer that you can call in and say, hey, I see I had an overdraft fee. Can we reverse this? I don't know. But anyways, so this went through. This is the press release. But it went through Rep Hill and Jay French from Arizona, or is that Arkansas? If you go here, this is again congress.gov, and you can see here the committee meeting was March 5th at 10 a.m. It was ordered and reported by the nays and the yays, 30-19. It passed the House, or it passed here. That's the House Financial Services Committee. So it passed. Yeah. Hey, well, I guess I will move on. It banks and credit unions. The point of the conversation is that people need to know. That's why I put every single person's face on that slide. Share it. Let people know what their elected officials are doing and how they're spending their money. Too bad for most of MAGA. Banks are back to the same BS. I'm glad I moved to a credit union. Credit unions are in there too. Please please share, please like, share, and subscribe. Y'all know I'm new. I'm building up my page for real. But like, share, and subscribe. But I want to get the word out about these. So I hashtagged all those Republicans. It's like they do these things behind the scene. I had no idea this many Republicans signed on and supported that bill until I went down into the bill and found out all the supporting Republicans. That was a lot of people. I don't even know how many it was. So it's important for people that in these other states, in those red states, that are voting for these people and think that these people are doing the good work for them, to know what they're doing, because I don't think that they know that they're reversing everything that's going to impact their money. Not only are people losing their jobs, but now we're going to make it even more expensive to bank. They're looking at ways to unbank and debank. There's a lot going on. So anyways, I'm going to go ahead and post this. I will be back because I have one more thing I think I wanted to talk about, but I think I want to do them in separate segments so that my videos aren't that long. I don't know. That's what I'm going to do, though. So I'm going to end this one now, and I'll be back in a few to talk about a couple other things. All right. Talk to y'all later. Bye.